Good afternoon and welcome to BizTech Asian Midday Market Watch. I'm your host Samantha Voon and my co-host today, Jeffrey Halley. It's Tuesday, the 2nd of April, and our guest today is Tina Teng, an independent market analyst based in Auckland, New Zealand. Tina, good afternoon. Thanks for being on the show again.
Hi Sam, hi Jeff. Nice to have me again.
Let's do what we normally do to lead the show out and have a look at markets around Asia today, and then we'll get Tina's thoughts on those. Looking at the Nikkei 225, it's basically unchanged today. Shanghai is also unchanged, so very much hurry up and wait there. But the Hang Seng, which has returned from holiday today, has leapt 2.33% higher. Sydney's also returned from holiday today, but the ASX 200 is actually down 0.14%. In South Korea, the Kospi is up just 0.11%. Singapore is just 0.37% higher, and Kuala Lumpur's KLSE is up just 0.36%. Tina, obviously the Hang Seng is standing out like a sore thumb there, but otherwise it's an extremely quiet day across Asia.
Yeah, I think it's a long weekend in the Western world after the Easter holiday, and also there is mixed picture in the US and Asia. There's like a opposite direction on Wall Street and Chinese stock markets. So overnight, Wall Street closed in mixed picture because there was a very strong economic data. The ISM manufacturer PMI actually came to be much stronger than expected. So that's really slashed the hopes for the Fed to cut interest rate in June, which gave the bond markets a little bit shock. So the bond yield spiked and caused this risk-off sentiment. So that's why I think Wall Street probably now are facing a pullback risk, because that's been really just go with this upside momentum for the last 5 months. And on the other side, Chinese market is our strong after return from the weekend. There's a positive economic data from China. As also this is manufacturing PMI actually expanded. It's first time for 1 year. So I think just people think probably there's a bottom up opportunities here.
Okay. So oil prices continue to climb too amid geopolitical tensions. Tina, what do you make out of that?
Recently, I can see the commodity markets are actually in a bullish sentiment, especially in the oil markets. So there's a combination of factors. Catalyst from the weekend was the tensions between Israel and Iran. So that's just called spike in the oil price. Now that futures price has hit a 5-month high. So I think just the moment like a soft landing scenario in the US and the economic recovery in China, probably now you can see a little pick up from China. So I think just like right now people are seeing this much better outlook for the oil market demand.
Also, gold is flirting with record highs as well. Tina, what's your opinion or your outlook on gold at these rarefied levels?
I would say this is most likely due to the risk-off sentiment. So the gold is seen as the safe haven asset, and also once gold broke through the previous highs, so that's probably caused another spike in gold price. And in the medium term, I still see the US dollar could go downwards, just because no matter what, the Fed would cut interest rate this year. There's like strong expectation across the markets.
Mm-hmm. Okay, so Tina, let's look at another asset that has been popular this year. So that's Bitcoin. It's been seeing a recent pullback over the last week. What can our viewers expect from this, Tina?
So Bitcoin, so that there's a saying, like especially across Twitter, so there's a pre-halving retracement. But the cycle a little bit different from the previous cycles. Bitcoin reached all-time high before the halving event. What I can see is definitely that's a profit-taking moment from Bitcoin, and some funds probably go into other meme coins. Recently, there's a new launch of some meme coins. So I still see that's more optimism in the crypto markets, just because there's an expectation for central banks to start cutting interest rates. So I think that's a temporary pullback in Bitcoin markets.
Thank you, Tina.
Now, Tina, we've had some pretty good factory data from China this week, and it does look like their near $19 trillion economy is skirting these downside risks. Is this data reason for optimism? Because we've had a few false dawns before when it comes to China, and there still seems to be stresses in the economy as a whole. What should investors be looking out for here? I mean, is there reason for optimism, or is this perhaps a false dawn?
So there are still uncertainties, actually huge uncertainties in the property markets. That's problem. However, from the recent data, that shows positive signs. China actually, I think the economy is picking up at the beginning of this year from the recent manufacturing PMIs and the CPIs. However, I think just the investors are digesting this news, and on the other side, they keep eyes on the property markets. There's definitely the government efforts to bolster the economy. So I think just investors are betting for a recovery in the Chinese economy this year. So it's just like bumpy journey.
Okay, so thank you for speaking to us, Tina. I'm Samantha Voon.
And I'm Jeffrey Halley.
And we've been speaking to Tina Teng, independent market analyst on BizTech Asian Midday Market Watch. This video and podcast will be on our website, www.biztechasia, on our social media platforms, as well as our syndication partners' TV and radio stations and websites. Please like and subscribe to our various platforms. Thanks for tuning in.